Kaohsiung reporting there. Well, for more insight into China Mobile's Shanghai listing, let's bring in Ryan Patel. He's a global business executive and senior fellow at Claremont University's Drucker School of Business. Want to welcome you back to the show, Ryan. Biggest mainland listing in 10 years, shares up about 2%. Give us your take on this debut.
Well, it's always great to be on with you, Mike. Well, it's good news because for China Mobile, even if it was flat, it was up a little bit 2%. It didn't show the resistance as some had predicted, and I think that's what from a day one perspective, everybody was kind of holding their breath to see how the markets was going to react. So I think that's a good news. It was a good day for the group, and I think part of what they need to do specifically when you IPO like this is pull on a couple of these days, string together some nice gains. They need to provide that confidence is what I think China Mobile is, not just for themselves, but for other companies coming behind of where the capital is going to be coming from.
You know, the Wall Street Journal was out this week with a story about the stock markets in mainland China, and they are swelling. This is a sentence that just pops off the page. The total value of onshore Chinese stocks rose about 20% last year, according to S&P Global Market Intelligence data, advancing by the equivalent of nearly $2.1 trillion. So what do we make of all of this?
That there's demand, right? You got the Shanghai market, which, predominantly compared to Hong Kong is more individual investors. If you look at China Mobile's shares, I think it was almost 40% premium to the price than the company's existing Hong Kong listed shares. So that to me shows that there is that demand for that, and that there are these two different markets, and that these types, what investors are looking for in Shanghai is a little bit different at that price point, that they are willing to pay a little, not a little bit of premium, but a premium for something like this.
And so, Ryan, could China Mobile be a blueprint for other Chinese companies leaving the U.S. and listing in Shanghai, do you think?
Well, it's hard to copy the largest, telecom company out there as a blueprint per se.
Good point.
But, yeah, I mean, yes, do they cement the path of getting to the Shanghai market that it's possible? Absolutely. Is there going to be some struggles for some other companies? Sure, because you're going to have some resistance to doing that. I mean, DiDi's another one that may be coming right after them, but how you open, can it be successful? And I think there's still this question around ensuring that their capital raises. But it is one thing is clear, Mike, that there is capital in the Asia market willing to support, and I think that's what the question the answer is there.
Yeah, in Kaohsiung's story, we heard from the woman saying that this is a bigger trend, this homecoming. Kind of outline that for us. How do you see all of this unveiling?
I think it's going to be, at the end of the day, it's about profit. What is the best interest for each company? And this is another avenue that companies can evaluate, regardless of what company there is. So for Chinese companies, as of right now, looking at the U.S. market, Wall Street, and potential attention, this is the least path of resistance and provides shareholder value if that's what they deem. And so, Mike, that wasn't necessarily there a couple of years ago, and now it's an option. And so I think, as for any stakeholder who's putting money in any of these companies, you would want the company to do what's best for all that is involved.
You're talking about best interests of companies. Talk to us about China Mobile's priorities moving forward. Where do you see them headed?
Well, they have to be focusing on premium 5G, which they are. I think the cloud infrastructure is something they're going to invest in further. But, one thing that I really do think that they're going to, it's kind of flying underneath the radar is their smart home and technology around that. I think that's a market, an industry that's still underserved, even though it's billions valuation in general. And I think when the first come, first serve, and the first advantage mover is going to be going to take the market of the pie right there.
Yeah, the smart home is interesting, and I think you're right. It is under the radar. When do you really see that folding out, though?
Well, I think part of that is also the consumers. So they can continue to invest in that aspect as long as other companies. But the consumers, we're going to have to see more mainstream adoption. Mike, we're not even, we're barely there if you think about just payment in wallets with digital cards, let alone having smart devices in homes. And we're seeing Alexa and Google Home, and those are starting to play in and get a lot more popular, where the costs starting to decrease. That allows to get into more homes and potentially more accessories, which obviously is cost per make it cheaper for everybody behind that. So I think we're going to start to see the trend when you see more of the rollout.
We got about 30 seconds. What other listings should we be keeping our eye on in the first quarter of 2022, either in Shanghai or Hong Kong, do you think?
well, the Hong Kong DD, I mean, they're about to, I mean, the rumors that they're, not rumors, that they've stated they want to come out of the U.S. and potentially Hong Kong, listed by potentially what we're reading from analysts by the end of April, maybe June, and that's really popular for them because I don't think that they're going to have to raise new capital. There's ways that they're going to be able to take the U.S. investors and move them along to Hong Kong.
Once again, our thanks to Ryan Patel, Senior Fellow at the Drucker School of Management at Claremont Graduate University. Thanks again.
Thanks, Mike.
Meanwhile, China